Hi, I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree.
And I'm Jeff Weniger, head of equity strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hello, everybody. Welcome to Minds on the Markets. We are about 2 weeks from Election Day, even though early voting has begun in a variety of states. At least I know when I've driven around, I see the signs out there in front of town halls and whatnot. And we thought we would talk to you about the race for fiscal and monetary policy stimulus because all eyes have obviously been on the Fed of late. But Jeff, wanted to bring you in here. What are we looking at when we're focusing on potential Trump or Harris administration? I just want to remind everybody that fine, we will have a new president, but who will control Congress? That's really important as well. But when we're looking at the various proposals out there, what should investors be thinking about? And perhaps more importantly, Jeff, what's priced into the market already?
Exactly. I mean, everybody games out the poly market odds on Trump and Harris, but it's all moot if you don't have a red wave or a blue wave. But look, the policy proposals are generally kind of a mixed bag. If you look at, let's say you have a thesis whereby Harris is victorious, some of the negative things for the market would be the prospect of raising the corporate tax rate from 21 to 28. And then the other thing that obviously Wisdom Tree looks at a lot because of our buyback strategies, you have the 1% buyback tax, which is a new phenomenon of the last few years that could theoretically go up to 4. Who knows if they end up settling at 2 or 3 or something like that in a Harris administration. But Kamala wants to offset it with the earned income tax credit, kind of expanding that, enlarging that, giving things like, I think the figure is $6,000 in a tax credit if you have a newborn baby. So there's these offsets. Now with Trump, that's a little bit more of a known quantity situation because, we joke he came down the escalator 9 years ago. Every third word out of his mouth is tariff. So if you were to liquidate foreign equities on account of Trump tariffs, wouldn't you have already done that in prior cycles? I would say things to look for in terms of the tax code, fiscal policy out of Trump. Does the no tax on tips concept that they're both putting forth, does that become reality? He had also floated deductibility of an auto purchase. I don't know if you saw that. The loan on your auto purchase could be deductible. And then beyond the tariffs, of course, there's the 15% corporate tax rate on manufacturers. So that could be something that ends up helping out, or at least as an offset for industrials.
So that's, that's fiscal policy proposals, right? Mm-hmm. But there's another element to this, and it's the regulatory aspect. And, there's, I think, a conventional wisdom that Trump would be perhaps more business friendly than a Harris administration on the regulation front. And one area in particular could be energy. Is that true?
Yeah, and I've tried to game out the Mag 7 too, because you have the activist FTC from the Biden administration and trying to figure out how much they may allow them to be or not be monopolists over there in Silicon Valley. But yeah, energy's been generally a weak sector. There's the notion that Trump is bullish for oil stocks, that type of thing, but it's not borne out in the tape, really. I mean, the strong groups in the last 90 days or so, more like financials and real estate than energy. So that's one of these things where there's these theses that float around. Oh, you like Kamala Harris, you like solar, wind, that type of thing, and you like big oil if you like Trump. Sometimes the tape doesn't necessarily agree on these things. It's not as easy as if A, then B sometimes in the stock market.
So, in our final minute, let's quickly turn to monetary policy, specifically in EM. We've talked about the Fed ad nauseum, right, over the last so many months, if not a couple of years. What about China? What about India? Yeah. What are we seeing there? Is every country on a loosening monetary policy stance, or do we have some kind of divergences in the EM economies?
Well, yeah, I mean, India is basically on pause at this point, but now you have what really looks like, I've called it the activist central bank out of the People's Bank of China of late. That is a central bank that expanded its balance sheet by 9.4% between May and September. I don't know that a lot of people are really on this case yet. I mean, you can see Chinese equities melted up and have subsequently retraced, but this was the the whole thing about it, Kevin, if you want to be bulled up on something like the S&P 500 6 months ago, it was despite China. Now you have China joining the fray. Policy rate cuts. What do you have? Mortgage rate cuts. A cut on your minimum down payment on your second home purchase, and then now also making loans for stock buybacks. So it is monetary floodgates wide open in China. I think that is the thing that could be over these markets in a bullish type theme for 2025.
That's great. I mean, interesting thoughts, some things that really haven't gotten that much of attention, quite frankly, and they should be because they're important and affecting global markets here. But we're going to end it there. Thanks,
Okay.
everybody, for tuning in. Remember, we are obviously on video here in YouTube and the written word at www.wisdomtree.com. This was Minds on the Markets.